What is success to a fellow trader or investor? Why do some succeed and others never make it? Is it worth all the sacrifice required, or are we chasing a dream that can never be satisfied? Hi everyone, let me introduce myself. My name is Todd and I will be your host for this presentation. Little bit about myself. I am a self-directed, trained trader and have traded in the stock market and commodities for many years now. Like many fellow traders and investors, I began a search for the answers to those questions at an early stage of my trading profession, that led me to talk about price and volume analysis, or better known as volume spread analysis. You may notice that there has been many trading or charting software in the market. Since we introduced price and volume analysis and trading in Malaysia in 2006, there has been a big follower as the truth of the market. And hence, there is a big focus on volume-based indicators with this software, and that is very important for a number of reasons. Volume is everything if you're a scalper, day trader, or position trader. There are millions of different indicators available these days, but most of them are junk. All you need is price and volume, assuming you know what the heck you're doing. Volume can show you pretty much everything you need to know, from support and resistance levels to institutional interest to market conviction. If you know how to ride the volume wave, that is volume spread analysis. Here is a little introduction to volume spread analysis methodology. Richard Wyckoff was a trader during the early 1900s, United States stock market. He wrote several books on the market, and eventually set up the Stock Market Institute. At its core, Wyckoff's work is based on the analysis of trading ranges, and determining when markets are in accumulation, mark-up, distribution or markdown phases. Incorporated into these phases are the ongoing shift between weak hands, the public or better known as the herd, and the insiders, professional, now commonly known as smart money. Tom Williams, the current chairman for TradeGuider, was himself a syndicate trader who could see that the markets were manipulated and that the key to unlocking the truth lay in the relationship between the volume, the range or spread of the bar, and the closing price. Tom spent many years studying the concepts of Richard Wyckoff under the guidance of another great past syndicate traders. While he was in US during his time, Tom carefully studied many thousands of charts to recognize the obvious patterns that were left when the professional smart money was active, and so began the evolution of volume spread analysis. Volume spread analysis seeks to establish the cause of price movements. The cause is quite simply the imbalance between supply and demand, which is created by the activity of professional operators or smart money. Smart money are some of the most elite, intelligent, smart and well-funded few insiders or group of individuals whose jobs are to take money away from the uninformed public in the stock market by deceiving the general market. By learning what smart money does with their money, don't you think you can have greater success with this methodology? Think for an instance, if you know the volume spread analysis methodology. You can follow the smart money as they are entering, exiting or not participating in any market, thus empowering you to make more intelligent, timely and informed decisions. You would 1. Learn to think and act like a professional trader. 2. Identify hidden professional buying and selling to make more successful trading decisions. 3. We at the TradeGuider parent company provides a complete range of trading software, education, training and ongoing support. I hope you have learned. 1. Volume is activity. Hence tick volume can be used where actual contract volume is not available. 2. Two ways of looking at volume, that is the relative volume in relation to the previous bar or bars, and the actual volume, the amount, size, of volume an individual bar represents. 3. Strength comes in on down bars and in reverse, weakness comes in on up bars. 4. Markets do not like high volume up bars with wide spreads. Why? Because there is a possibility of professionals selling into such a bar. 5. Professional money deals in large amounts and thus sells into up bars so as not to be hurt by their own selling. If you want a piece of the trading decision making, you can get TradeGuider software for your day-to-day trading decision. We have studied a fair number of VSA setups and scenario, and TradeGuider says it has over 400 signals, but it can come down to be summarized to a common categories. Here are some of the signs of market strength and market weakness. 1. Tests, successful and unsuccessful. 2. Shakeouts. 3. No demand. 4. Stopping volume. 5. Pushing through supply. 6. Upthrust. 7. Selling, buying climax. 8. Climatic action. Many more are available from the software. In the next slide, we will show you several examples of sign of market strength and weakness that you would normally use in TradeGuider. Supply and demand. We have all heard the pundits in the money section of our news programs telling us that this market or that market has gone up, down or sideways, for some specific reason or another. The price of genting board has gone up and the stock market has fallen, for example. Of course, at another time the price of genting board will rise and the stock market will rise too, but nobody ever seems willing to explain this reasoning. The simple truth is that nobody really knows why news may have caused the markets to move in one direction or another. News doesn't actually drive the markets, it follows it. Prices are driven by supply and demand. When demand is strong and supply is limited, prices rise. When demand is weak, or supply is excessive, prices will head lower. If demand is strong and the news is bad, prices may still move lower. But the market will react less strongly than if the demand had been weak or there was too much supply. The market may even rise despite the worst possible news. The key to trading successfully is to determine the balance of supply and demand in the market. Here is the first most common sign of strength is test of a chart from TradeGuider. In the center of the chart we have a sign of strength test on low volume at bar 1. Test occurred because professionals are testing for something. It is testing for presence of sellers for their readiness to sell to the weakness. Market falls because there were absence of buyers, demand, and presence of sellers, supply. To confirm the test, we need to wait for the next bar to be up to confirm strength, but we must have strength in the background. A clue is looking to the left side of the chart for background strength. As a result of the test being confirmed, this counter Hong Leng Bank can mark up higher beyond 10 ringgit and thus making a hefty gain of 50%. Second is sign of weakness, hidden potential selling or buying climax. TradeGuider software has built-in VSA engine that display dialog boxes to interpret the individual market conditions when the VSA engine detects sign of market weakness. In this TradeGuider chart we have Genting Malaysia display SOW at the old high of 3 ringgit 80 cents. Buying climax occurred with up bar with wide spreads closing middle or low, on ultra high volume. You have a dialog boxes showing SOW1 potential buying climax with ultra high volume. This evidence bar 1 on the right side of the chart shows trading syndicates having a golden opportunity to unload large amounts of stock at high price without their activity resulting in lower prices. This usually marks the high point of the market for Genting Malaysia. Third is upthrust. In this chart of Genting Malaysia, you can see TradeGuider engine mark bar as an upthrust sign of weakness. In the law of supply and demand, you have now at bar a swamping supply, and as a result the market for Genting Malaysia mark lower until it hits the support before sign of strength, that is test before the breakout. The test was low volume, meaning accumulation has been completed and the smart money is ready to mark higher till it hits ring at 3.90. Remember, market does not go up in a straight line, it may go up 3 steps and down 1 or 2 steps. These are some example of the several hundred sign of market strength and weakness. In summary, we at the TradeGuider Malaysia are based in Malaysia to service the Malaysia and Singapore regional. We are an educational provider that strongly believe in empowering traders and investors at every stage of their development. To purchase your TradeGuider membership, click on the order button and you can either pay by cash or credit card. It is so simple. Our 30 days 100% money-back guarantee. TradeGuider Malaysia offers 30 days money-back guarantee for Malaysian TradeGuider buyer.